Welcome, ladies and gentlemen, to a new edition of our online interview series here at Commodity TV. And we want to talk today to Mark Learmonth, the CFO of successful Caledonia Mining. Good morning to you, Mark, to the Channel Islands. How are you?
Good morning, Jochen. How are you?
Fine, fine, thank you. Yeah, beside the sad news from Ukraine and the war, everything is fine. I just saw gold is at 2002, and this is a development which we like in the gold price, of course, but we don't like the reason why this happened. That is for sure, definitely. But nonetheless, we have to do our work and talk a bit about your wonderful company for an update. And let me start before we come to the gold price and your cap and collar, which is really important to talk about. Yeah, how was the production in the last month, especially last quarter for you? And how do you see it down at the Blanket Mine?
Okay, well, look, I was actually at Blanket Mine 2 weeks ago. Considerably warmer there than it is in Jersey today. Well, as you know, we've already announced 2021 was a record production year for us, and 2022 so last year we did about 67,000 ounces. This year we're looking at sort of between, we say 73 to 80,000 ounces, but our target is clearly 80,000 ounces. Typically, as usual, the mine gets off to a relatively slow start in January. But since then, February's been a good month, and we're pretty much on track to achieve that the top end of that target range. Encouraging. So far so good.
So far, so good. That means the mine is making money. You are paying a quarterly dividend. That is all fantastic. Some shareholders ask me, when do you think they will raise again? But I think you raised the dividend so fantastically. I think since, was it October 2019?
Yeah,
about 107%. That is outstanding, right?
We've doubled it. And I've got to say, you will have noticed that, or you may have noticed, or perhaps you didn't, because we put the announcement out sort of like the 3rd of January or something, but we didn't increase the dividend on in January this year, and we were trying to signal the fact that the focus of the company is going to change somewhat over the course of the next few years. We've said many a time that we continue to look for new assets in Zimbabwe. We've got our hands on the first one, which is Mali Green, which we no doubt you're going to ask me about. We're increasingly confident we're going to get our hands on at least one other asset, which is potentially much bigger than Mali Green. And so the company, over the course of, I hope, this year, by the end of this year, we're going to be a very different sort of company to what we are today, with a focus increasingly on quite aggressive growth, quite aggressive development. And so in that context, we thought it appropriate not to continue ever increasing the dividend, to try and begin to sensitize the market that we're sort of pivoting somewhat. This conversation will be much easier, later in the year when our plans become more transparent and we can talk about them. But the underlying business is generating huge amounts of cash, and as we expect, there is you're going to ask me about the cap and collar now, aren't you? Because that I was going to talk about our capex profile. So if you ask the question about the cap and collar, I'll explain that in the context of our capex program.
Absolutely. Before we come to the cap and collar, just on Mali Green, everything is going the way you want it?
It is. No, we're very enthusiastic about Mali Green. As usual, the pace of activity in Zimbabwe is slower than you'd expect, and it really comes down to basic things like inability to get access to electricity, to do the core splitting, and in the past couple of weeks we've had real difficulty for the people on site getting access to mobile data communication so they can actually do their work properly. But that is making good progress. What we're doing is we're reanalyzing the old core samples, which are still there, with a view, hopefully, to upgrading that resource base from primarily inferred to something of towards the sort of M&I level. And hopefully that should be done, I'd have thought. We're hoping to get it done sometime in May now.
Okay, super. Then let's come to the cap and collar, because I think this needs a bit of explanation for the market. I liked it personally a lot because I don't love to be at risk, because I think you still have to invest some money here. the new shaft is done, but the new shaft needs also to be connected to the production areas.
That's
so
right.
maybe you can bring that a bit into the context why you have done it. I mean, of course, it looks today like with gold over 2000, it looks like, oh Jesus, why did they not have waited 1 week and then maybe they would have done it at 2100? But it is what it is. You need to do a decision. I fully understand that, and so please give us some context around that, please.
Okay, well, actually, we put that cap and collar arrangement in place about a week before we announced it, but we couldn't announce it because I think the New York market and the Vic Falls market were closed on the Monday. Then, unfortunately, we had the fatality at the mine, which meant that we felt it inappropriate to disclose sort of matters of sort of a commercial nature in the context of a fatality. So we'd actually put this place in about a week or so earlier, but you're quite right, with the benefit of hindsight, we'd have done it today. But the reason we've done it is because you're quite right. Central shaft was finished, it's now operational, but we need to connect that shaft up to the mining areas. Now, because that central shaft project was delayed by about 7 months due to COVID, the mining areas have continued to go deeper. And so it means that we've actually now got to do more development more quickly to catch up with where the mining areas are now, not where we expected them to be if we'd have done this thing a year or so ago. So the development expenditure right now until about the end of May is quite substantial. In addition to that, I think, again, as we disclosed in our Q3 MD&A, which we published in November, our CapEx requirements to make good the deficiencies of the Zimbabwe grid are very substantial. We've had to spend about $3 million upgrading the equipment which protects us from the peaks and troughs in the incoming supply. And also very late last year, we lost 2 generators, which have been basically flogged to death because they've been having to work too hard. So that was another $1 million there. So the upshot is that for the first 6 months of this year, we're going to be spending about $18 million.
That's 1.8.
1.8, yeah, 1.8. And you put that in the context of what we spent last year, which is about sort of $23 million. Very high CapEx. We're going into that with cash, but that cash is going to come down. And there's 2 big variables in our business. The first is production. The second is the gold price. And to the extent that for that first sort of 6 months of 2022, we can establish a floor under our gold price to do it to get rid of that downside risk. We've done it. Okay. Ordinarily we would not seek to hedge because as a cash generative business with a relatively modest cash flow profile going forwards, we wouldn't need to do it. But just for the next 6 months, we just need that security of a floor to the gold price. So it's not for speculative purposes. I agree the timing was unfortunate. No one really knew what Putin was going to do. And so we did it when we did it, and it provides us a degree of stability going forwards.
Yeah, honestly, I like it more that you not speculate with the business and with the shareholders. Of course, I like it more when you put not the business on risk. So it's much better because it shows stability and that you have something in the foreseeing future. And I mean, gold will rise further. That is also for sure to me. And then we will benefit when it's at 2,400, even much more. That is not a problem at all. Definitely. Good. So far, I saw also VanEck is now up at 4%, but that's ETF, so that's a passive fund. Yeah. So they had to buy up, of course, and but that's also a good thing, of course. Anything else you want to say about the business, about the company?
No, I'm going to say we as I say, we visited Blanket Mine a week or so ago. What is now just about to take off is the solar project. Again, that's been subject to delays because of COVID, and also the manufacturing facilities in China that produce the panels. They were working on part-time, and then once they'd made the panels, then it was difficult shipping them. So that project had been somewhat delayed. That's now going full pace. So the equipment is actually turning up on site right now. And so over the course of the next sort of month or so, that project is now you're going to see some real progress. And do you know what? It's slightly frustrating that having spent 5 or 6 years spending nearly $80 million sinking this fantastic central shaft, all we've got to show for it is a big headgear. in the course of 6 months, $14 million, we're going to be looking at a massive array of solar panels, which is really going to attract attention. It's just so frustrating that these things, which are relatively simple to do, just attract much more attention. But that will become operational by the middle of this year, by the end of June. We'll protect our electricity supply somewhat. We'll also give rise to a further reduction in our costs. So that's going extremely well.
Super.
So we're pleased about that.
Fantastic. So we can say dividends will still be paid, of course. Let's say dividend raise is a little bit postponed due to company growth, due to investments for the future of the company, and then probably a much larger company, different company with more production on different projects.
Yep. Absolutely.
Fantastic. Super. That's a super game plan, Mark. Thank you very much for giving us the update. And I have a feeling that we talk in maybe 3 to 4 weeks when you bring out your numbers. Great.
Good.
Hey, keep safe and healthy. Thank you very much. All the best.
Thank you, Jochen.
Thank you. Yeah, ladies and gentlemen, that was Mark Learmonth, the CFO of Caledonia Mining. Yeah, you heard it. The company is still in great shape, of course, doing extremely well. The cash generator blanket mine is really working. Unfortunately, due to COVID and the situation in the world, the central shaft is by 6 to 7 months delayed. So now they have to connect the production areas with the shaft, because otherwise you cannot bring up the ore. That is also for sure. And so $18 million have to be invested. That is a great thing, because I think it's more or less a one-time item, and then they can go full throttle, and the production can really grow further then. So still the company did their cap and collar. It was unfortunate, but this is the nature of the business. You have to do a decision in your life when you manage such a project in such a company. And I think it was in the interest, well thought for the shareholders, to keep any risk of any financial risk of us shareholders and also of the company. So for my standpoint, this was really well done, really well managed, and the time point was unfortunate, but it is what it is. So we make a little bit less money, but the company is in great shape, and then we make more money in the second half of the year when gold will be at 2,400. Very nice to see. So check out Caledonia Mining. If you are not a shareholder, this company pays a quarterly dividend, has still a dividend yield of approximately good 4.5%. So very likely, very nice. Thank you for watching us, and bye-bye from Switzerland.